This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market shares were up today as several economies start to ease their lockdowns. MSCI's index of emerging market shares climbed about 0.6% on the day, extending gains to a second day. Nigeria's all-share rose 1.4%, and that's after recording its biggest rise in 3 months yesterday. It gained about 3%. Now, though the stock market there has lost 14% so far this year, traders are saying that funds have been switching back to equities from fixed income securities. They're certainly hoping for a stock market rebound later this year. Now, we saw banking and consumer stocks sort of dominating the top performers list. Today saw the likes of Nigerian breweries, Guinness and flour mills topping the gainers list. Now, also coming up on today's show. As COVID-19 sinks the aviation industry, we take a look at how Ethiopian Airlines may just become Africa's saving grace. And the EU Commission forecasts a deep recession brought on by effects of the coronavirus. And Vodacom launches Africa's first live 5G mobile network in South Africa. Well, let us kick off today's show with Matters Aviation. As the impact of COVID-19 and, of course, government reactions sweep through the industry, Ethiopian Airlines Group says it is prepared to come to the rescue of stricken carriers around Africa. Now, according to the continent's biggest airline, talks are underway with the government of Mauritius about the revival of the island nation state carrier, which, of course, was put into administration last month. Now, the global airline industry has been thrown into a historic crisis by this pandemic, which has led to the grounding of almost all aircraft. African carriers haven't escaped the bloodbath, with the industry set to lose about $6 billion in passenger revenues this year alone. Well, let's find out more on Ethiopian Airlines' plans for Africa. We're joined by Coletta Wanjohi in Addis Ababa. As always, good to see you, Coletta. Now, what we hear is that Ethiopian Airlines are in talks to rescue some of Africa's struggling airlines, including Air Mauritius, as we mentioned. Give us a sense of what specific airlines are that the carrier is looking at, and has there been any progress made on those talks?
Well, Uche, great to be here. And as you've said, already talks have begun with Mauritius, at least, which was put under administration a month ago. So Ethiopian Airlines says that the talks have been going on, and it hopes that it will progress to get to something that will be able to give it good business. In addition to that, we know that already Ethiopian Airlines is looking at South African Airlines and saying that just in case South African Airlines reaches out, then it is happy to be to step in and help in whatever form of rescue South African Airlines will be looking at. And the airlines has a good record in terms of rescuing airlines in the continent. We know it has stakes in Zambian Airlines. It has stakes in Mozambique, in Chad under Air Chadia, in Malawi. It has stakes inside there. And Ethiopian Airlines' argument is that the aviation industry is still very minimal. 20% is what Ethiopian Airlines is currently enjoying. So there's still a lot that other airlines can the continent. That is the notion that it's going with, and saying that it is happy to put as many airlines into the sky because the competition is not really there, and there's a lot to be done in the continent.
Well, that is quite an ambitious plan now, because there is some debate as to whether Ethiopian Airlines can take on these struggling carriers, especially given that it has lost over $500 million since January, and apparently it is already laying off some of its staff. So what is the airline's financial state right now? Can it take these on?
Well, the airline itself has said that 2020 might turn out to be a bit gloomy, although it had hoped that 2020 would be better. Looking at just like you've said, over half a billion already is going to be lost between January and April, according to the airline, and it's looking at probably by the end of its fiscal year of June, it's looking at having lost at least about $1 billion in terms of loss from ticket sales. So, and it says that because of this, then this is mainly caused by the fact that a lot of international flights, especially passenger flights, have been forced to be stalled as different countries are putting restrictions in terms of entry and exit from their countries. And now, if you go to the Bola International Airport tarmac and you see all these aeroplanes that have been parked because out of over 100 international destinations, Ethiopian Airlines can only do 10 in terms of passenger flights, and within the country it can only do 40. So all this is money. It is losing a lot, and the airline has said that it has to think further, and that's why it's looking at cargo.
Well, tell us a bit more about that, because the airline seems to be compensating for some of these losses with cargo and repatriation flights as well. Give us a sense of the airline's operations since the virus outbreak.
Well, since the virus outbreak, Ethiopian Airlines said it discovered that cargo business has some good money there, because initially it had about only 10 cargo planes, but realized there was more demand for cargo as different countries said that they will stall or they will hold passenger flights, but they will still encourage cargo flights to come into their country and also leave. So it has gone into that line, and already it had a footprint of about over 70 destinations before in terms of cargo transportation. So it has used that to continue growing the business. And as we're talking now, the last report that was coming out from the last analysis from the cargo department at the airline, that was as of March, it had said that it had done over 48,000, transported over 48,000 tons. Now there has been an up point for the airlines, because it was chosen by Jack Ma, who was giving donations to Africa to transport a lot of medical supplies, and with that it kind of attracted the United Nations to put up a hub at the Bola International Airport in Addis Ababa, where WFP is doing a lot of logistics. So we have Ethiopian Airlines lifting medical supplies from there to different parts of the continent. And now that we have also repatriation that you've talked about, Ethiopian Airlines has put, if you look at the website, they're talking about if you'd like to charter a plane, then they're available. So all these are opening up positions. And now Ethiopian Airlines has recently repurposed its 4 passenger flights of the model of Boeing 777, which each has a capacity of carrying at least 100 tons, and it's using that now to do a lot of cargo business. So, and it is saying that beyond COVID-19, it is that cargo business is something that it can go further in. And just to top that up, it has launched an app where people can be able to track their cargo from wherever they are in the world. So it is looking at developing more of the cargo business so that it can stay in business even beyond COVID-19.
Well, many thanks for your insights there, Coletta. That's Coletta Wanjohi joining us there in Addis Ababa. Well, let's stay in the aviation sector. South Africa's listed airline, Comair, will enter business rescue in order to safeguard its interests, the interests of the company as well as the interests of its stakeholders. Now, this comes after the COVID-19 crisis disrupted the implementation of its turnaround plan. The company shares have also been suspended from trading on the Johannesburg Stock Exchange. Here's Angelo Coppola with more.
The company reported a $33 million first half loss and says it has made progress to fix the financial situation 6 months ago, but the crisis meant that they couldn't fully implement their plan.
I think this underscores the seriousness of the problem that aviation in South Africa is actually finding itself in. The fact that you've got one of probably the most successful and most profitable airlines that the country's seen. It's never made a loss in its over 70 years of existence, that it has suddenly had to go into business rescue even before its final results for the year were actually published is quite alarming.
It's to be expected. The impact of the grounding orders from government is very, very severe. Airlines don't have any revenue, but certain of their costs definitely continue, especially those that are labor related and also equipment related.
The surprise announcement caught union members off guard.
We are shocked, particularly because our members found out about this through the media. They were not officially advised of this situation. Even as a trade union at Comair, the only recognized trade union at Comair, NUMSA, was not officially advised of this set of events. We found out through a media communication.
Analysts and operators are concerned and want government to get involved in the sector.
So you can't just give money or guarantees to the state corporations because then it favours its own operations as opposed to the whole industry which they deregulated. So if any financial assistance is granted and it's in a competitive market, whether it's airlines or whether it's airports, it should be pro-rata to their market shares.
Whatever the decision from the authorities, people involved want to make the airline work.
As NUMSA, we will do everything in our power to save as many jobs as we can. We have communicated with the management and requested a meeting as soon as possible so that we can try and understand how this new set of events is going to affect operations going forward.
Getting the airline up and running again is only part of the challenge.
It does throw a lot of doubt into and lack of confidence from the public into the airline space, and that's something we're very concerned about. We need to know that we're going to have to work in terms of restart. We're going to have to get the confidence of the public back into flying, and that's very important for us.
The South African aviation industry is on its knees, and it's hard to see where the South African government is going to find funds to try and help that industry get back on its feet again. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Meanwhile, air transportation groups are now urging governments to take action and provide financial support to the global aviation sector. Here's CGTN's Miro Lu exploring that.
The airline industry is facing an extraordinary situation with travel restrictions, border closures, and a looming global economic crisis blocking its takeoff. Around 60% of the world's inventory of commercial aircraft are now in storage. That's according to data from Cirium, an aviation and air traffic analytics company. Governments around the world have taken different approaches when it comes to supporting their aviation industries.
Probably the best example of a significant, broadly termed bailout has occurred in the US, where there's been a combination of equity investment and just straight out, literally bailouts. Germany is another big performer in this respect, with some very substantial support for its airlines. The Australian government took the particular position. It felt that Virgin had quite an unusual share registry with 3 large airlines, and that in those circumstances it wasn't appropriate to be providing funding.
Experts say that these government bailouts and cash injections are only short-term solutions. The airline industry will face a long and slow recovery even after the pandemic ends.
I can't see it getting back to anything like the 2019 normal within 5 years. There'll be a massive change in the aviation industry. I think it's going to be severely challenged for some years. Domestically, perhaps in those countries that have domestic markets, things may be a whole lot rosier. But internationally, it's going to be extremely difficult. And airfares will be higher, costs will be higher, the networks will be fewer, the level of competition will be less.
Unlike China, not all markets are able to rely on domestic travel to support their respective aviation industries.
Some examples like Hong Kong, Macau, and Singapore, these markets are pretty much relying on international travel. They don't have any domestic travel market. Looking at our Cirium's April schedule, we have seen that these countries or markets, they have experienced over 90% of the capacity down year on year.
For aircraft manufacturers, the future is just as gloomy. Boeing recently announced that it will cut 10% of its jobs. An Airbus chief executive has said that it is bleeding cash at an unprecedented speed. With many countries still in lockdown, it will take a long time before blue skies return to the aviation industry. Miro Lu, CGTN, Singapore.
Well, now let's take a look at our corporate headlines today. In South Africa, Harmony Gold will issue $200 million worth of shares to fund its purchase of mines and other assets from Anglo Gold Ashanti. Now, Harmony says its net debt has increased by nearly $37.4 million to $267.3 million. In the 9 months to end March, Harmony Gold's output fell by nearly 9% due to full production lost as a result of South Africa's extended lockdown. And BMW says the effect of the coronavirus pandemic is expected to hurt demand and profit throughout the year. This has forced the German car maker to lower its profit outlook for passenger cars after a slowdown in first quarter deliveries. Now, BMW's passenger car deliveries fell by 20.6% in a quarter dented by the effect of the coronavirus. Now, the state of California has sued rideshare operators Uber and Lyft for misclassifying drivers as contractors instead of employees. The law, known as Assembly Bill 5, requires companies to treat their workers as employees instead of contractors. That's if they control how workers perform tasks or if the work is a routine part of a company's business. Now, the suit calls for a state court to order the companies to compensate drivers and pay penalties. Meanwhile, home-sharing platform Airbnb plans to cut around 1,900 workers. That's about a quarter of its global workforce. That decision was triggered by the ongoing coronavirus pandemic that continues to crush the travel industry. Airbnb joins numerous airlines and travel operators cutting staff numbers during the pandemic. And that is a look at our corporate headlines. Now, we are taking a short break now, still to come. Egypt will soon get a $2.7 billion boost to cushion effects of the coronavirus. And Nigeria suspends bids for major oil fields until global prices recover.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo.
Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Well, let's head to South Africa now. The Jonathan Oppenheimer and the Oppenheimer family have created the South Africa Future Trust, which of course will help small businesses in the country deal with the COVID-19 pandemic. Now, so far the trust has donated about $55 million and has partnered with the country's 4 largest commercial banks. These are ABSA, First Rand, Nedbank and Standard Bank. Interest-free loans worth about $34 million have so far been dispersed to about 5,800 small businesses. 55,000 employees of these companies can expect salaries at the end of this month in the wake of the countrywide lockdown. Now, the Oppenheimer family that made a fortune over the last century in mining was one of the first businesses to come forward with a relief fund when South Africa declared a state of disaster back in March.
We have had applications to all 6 of the partner banks, which we actually haven't even bothered to total, but is, I suspect, way north of 2 billion to 2.5, maybe 3 billion rand. The banks themselves have approved loan agreements, i.e. they've passed their vetting processes and they've extended unsigned loan agreements to SMMEs for signature, with in excess of 1 billion rand. And as of late last night, and I just got some numbers from my team, SMMEs had signed up to 600 million rand of concessionary financing to support employees, in supporting some 55,000 employees. So at the moment, it looks like basically SMMEs are signing up roughly 100 million rand a day. And I suspect by the end of this week, we will be pretty much fully committed at 1.12 billion rand.
And moving on now, Africa needs an immediate stimulus package of over $100 billion to combat the impact of the coronavirus. That is according to the African Development Institute. COVID-19 is currently straining the continent's already fragile health systems, as well as its economies and trade, amongst other sectors. From Dar es Salaam, here's CGTN's Daniel Kijo.
The Africa Development Bank says it has already tabled a $10 billion financing facility. The money will be split into 3 segments: $5.5 billion for oil-producing countries, $3.1 billion for low-income countries to protect low-income communities, and $1.4 billion will be available for the private sector. But the institute says much more is needed. An official from the Africa Development Bank's Communication and External Relations Department, Kwasi Kibdo, said to manage the economic and social impacts from COVID-19, the continent would need a stimulus package ranging from US dollars $110 billion to $150 billion in total, which would translate into $2.7 billion for each of the 55 states. The Tanzanian government has not yet officially communicated if it will request the funding. The amount would translate into 6 trillion Tanzanian shillings. The report emphasizes the need for innovative policies that focus on saving the livelihood of citizens and protecting jobs, rescuing private investments and small businesses, as well as strengthening regional and national institutions. Speakers at the meeting agreed that Africa's youthful population was said to be an advantage for Africa's ability to withstand the impacts of COVID-19. Older people and those with underlying health conditions appear to be most at risk of becoming severely ill. The delegates said that a response to the COVID-19 pandemic must be quick, unified, and focus on livelihoods to prevent an upsurge in inequality. Daniel Kijo, CGTN, Dar es Salaam.
Meanwhile, Nigerian officials have announced that the oil and gas industry will not hold bidding rounds for major oil fields until crude prices recover. Now, the continent's largest oil producer has been grappling with a significant drop in oil prices and a collapse in global fuel demand, which of course was caused by lockdown measures. This follows the coronavirus pandemic. Here's CGTN's Jane Keogh with that report.
In 2010, Nigeria enacted the Nigerian Oil and Gas Industry Content Development Act to boost dominance in the oil and gas industry. With the recent increase in developments, the country has managed to phase out the supremacy on the continent by international operating companies.
All engineering design, conceptual, front-end, detailed engineering design were done outside the country. But today as we speak, 80% of all engineering design in the oil and gas industry is done in country, which is a major achievement. You can imagine the capital flight when we did all those kind of design outside the country.
Extraction of oil and gas requires precision, leaving little room for error. This has often forced the Nigerian Content Development and Monitoring Board to lean on the international operators to ensure they did not engage in a practice known as fronting.
Oil companies used to give people work and tell them to go and sit at home. So they will come and claim that I've employed 20 people from the community, but we don't have space for them to work. So we just pay them at the end of the month. That's damaging to humanity.
The transformative legislation has allowed the country to retain highly skilled professionals and ensure that the Nigerian operators can now compete with the best in the world.
The IOCs, I will say, trust the work we produce from our yard. They trust us for the quality, they trust us for the schedules, they trust that we will do these works, we'll build this equipment under the strongest safety conditions, because what they want to see is everybody who comes to work every day return home safe at the end of the day.
Despite the recent development in the sector, revenues are expected to decline owing to the recent coronavirus outbreak. With the country heavily relying on crude oil sales, it has been forced to assume a lower petroleum price of just $20 per barrel. Jin Keo, CGTN.
Of course, you are watching Global Business Africa. Let's take a short break. Still coming up on the show. The EU Commission forecasts a deep recession brought on by the effects of COVID-19. And mixed reactions as Malaysian businesses reopen amid the pandemic.
Holding guns, machine guns from police forces toward the protesters.
Were you worried about your life at that particular time? Not at all.
What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Accra
Africa is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town. And I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Uche Okoronkwo, and I'm a business anchor and reporter at CGTN.
Welcome back. Well, let's head to Egypt now. The country is going to receive its first portion of an $8 billion loan from the International Monetary Fund. The government will get $2.7 billion next Monday in order to help it withstand the global economic shock which has been caused by the COVID-19 pandemic. Well, let's get the details on that loan. We're joined by Adel El Mahoui. He joins us now in Cairo. Adel, great to have you on the show with us. Now, this financial assistance package will be under the fund's rapid financing instrument. Is it clear exactly how the government plans to disperse these funds in the country?
So that's the first tranche, and that's basically 100% of the Egypt's limit or Egypt's share for at the IMF for the rapid financing instrument. And the government is expected to fill a median balance of payment needs. It will also allow the government to ramp up health and spending. It will enable the government, according to the latest releases, to provide relief for the most vulnerable sectors, like, for example, SMEs, and bolster foreign reserves. But that's just the first batch, and that's the 100% of the rapid instrument that will be arriving next week. Egypt is still also in discussion to finalize a separate standby agreement, and that will, if the IMF proceeds forward with it, will give it about up to 200% of its share. So that's a maximum of $5.6 billion, and that will go directly to help out relief the fiscal damage that has been put on the budget because of the pandemic itself. That's basically the general overview. Now we're still waiting for further and detailed announcement from the government about that.
Now, as you wait, there are some worries about this new deal. Of course, given that the previous IMF loan included measures such as subsidy cuts, which of course affected the people, and of course the float of the currency. So what sort of terms come with this new deal?
So the rapid instrument doesn't really have any major impact on Egypt's policy in general. It is part of the design for that instrument itself. If the Egypt moves forward with the IMF for the standby arrangement, that will be a different issue. The only restrictions for the rapid relief that Egypt will be getting is basically interest rates and repayment schedule for that $2.7 billion. The standby arrangement will probably see further announcement. It's still not clear. Egypt has not officially announced the plan with the IMF to move forward, but we know, for example, that Egypt and the IMF have been already working on government restructure plan, as Egypt tends to enhance its government management and operation, reduce bureaucracy. All of this has been in negotiations and get the guidelines and consultancy from the IMF. It is expected that once that standby arrangement gets the green light, that it will proceed for the similar measures as you've mentioned. We can see the remaining subsidies, however minor they are, get gradually lifted, and also to see more interference or more restructuring into the government employment structure in general. We're talking about 8 million employees for the government, and the government can probably do with only 30% of that amount of manpower in it.
Now, the country had just begun to see the results of those very economic reforms just before the virus hit. Give us a sense of how heavily this has impacted or weighed on Egypt's economy.
So definitely the biggest hit has been for the tourism industry, which has seen for the very first time in history a 0% occupancy rate. That means more than $1 billion of losses every month. That's just revenues from tourism. We're not even calculating the impact that the tourism sector have on other industries that the tourism industry keeps in business. Aviation comes next with 0 international flights, very flights to repatriate Egyptians to come back home. Domestic flights are down to just 3 flights a day, and there is almost all of these flights are nearly empty. That's another big sector. Hundreds of millions of dollars will be reported by Egypt Air and the aviation sector, the private sector in the aviation business as well. We're seeing food and F&B giants, food and beverage giants in Egypt starting a first wave of layoffs, and thousands of jobs have been announced to be in the process, and even more to follow if that impact stays for longer. We're seeing the general limit for government on the working hours, and the night curfew has affected commercial life. There is almost an evaporation in client demand, and therefore that also has affected trade in general. New orders nearly collapsed. Healthcare has seen a sharp drop, despite, of course, the pandemic process, but in terms of the private sector and private healthcare services, there's a very significant drop for inpatient and one-day visits, which mainly is because people are afraid to go to hospitals and get affected by the disease if they go there. So there's a risk factor that has been affecting the health sector. Imports delivery times continue to increase, and therefore inventory has been reduced. Overall, the finance minister Maid says that the expectations for the budget deficit for the next fiscal year will be widened, and he's projecting 7.8%. That's before it was just 7.2% in the next fiscal year, and 6.3% in the current fiscal year. General deficit is expected to be worth about $28 billion US.
And of course, the country just ended a $12 billion loan program with the IMF. As a result, Cairo is, of course, requesting the IMF and the World Bank, along with other African nations, to exempt it from debt repayments and interest payments as well. How are those repayments progressing in light of the current circumstances?
So Egypt has not reported any impact on its repayment plans or its ability to repay its installments and debt with interest as well. But the country is looking forward. It knows that there will be repercussions, and they will get bigger the longer this pandemic lasts. So that's why Egypt is starting to take a step ahead. It has a very good support of a $40 billion US in foreign currency reserves, which covers the country's expenses for at least 8 months, which gives it a lot of time to move. But that's why Egypt is trying to take an earlier step, because it knows that the ripples of the current recession are yet to come, especially the longer it takes. It is starting gradually to take measures to open up the country so that economically there wouldn't be a harsher impact as earlier expected, but that also is depending on the infection rates, which Egypt has been seeing increasing. So we're waiting for the government by tomorrow to announce what will be the next 2 weeks like. Will it continue with the same restrictions and therefore give an indication to how the economy will be working? Will it put on additional measures as the number has increased, or will it continue with its plan to gradually move life back to normal?
Well, as always, Adel, many thanks for your insight there. That's Adel El Maroui joining us in Cairo. Well, let's turn our attention now to the international front. Europe faces a deep and uneven recession. This is according to a new forecast from the European Union Commission. The EU's executive arm predicts a recovery in 2021, but warns that the uncertainty is exceptionally high. It also predicts a decline in economic activity this year of 7.5% and slightly more than that for the Eurozone. Now, Paolo Gentiloni, who is the Commissioner for the Economy, called it a shock without a precedent since the Great Depression. The forecasts for specific countries do indeed point to an especially severe impact in some that are popular tourist destinations. The deepest predicted contraction of all is Greece, and that's at 9.7%. Now, Chinese ambassador to the UK, Liu Xiaoming, addressed a webinar hosted by the China-Britain Business Council about how the two nations are working together on a vaccine and their common goals post-pandemic. While CGTN's Juliet Mann spoke to Sherard Cowper-Coles, who is the chair of the council, who facilitated the webinar.
China's ambassador to the UK says that COVID-19 is a major test that will bring major changes, making it all the more important for countries like the UK and China to cooperate, to support free trade, safeguard multilateralism and keep global supply chains open. The ambassador said that the economic disruption that followed the outbreak of COVID-19 caused a temporary slide in China-UK trade, but that anti-China sentiment in some quarters sparked by the coronavirus should not threaten strategic international investments.
Such talks are political virus. If go unchecked, they will poison China-UK joint effort and even international solidarity, just as it's needed most in the battle we are fighting. They will also undermine China-UK political mutual trust and cooperation across the board. We must stay on high alert and say no to these remarks.
The Chinese word for crisis is Wei Ji, a combination of two words, crisis and opportunity. Well, earlier I spoke to Sir Sherard Cowper-Coles. He's the chair of the China-Britain Business Council. And he says the crisis is creating opportunities between the UK and China to stoke economic growth.
In some important ways, it's brought China and Britain closer together. I mean, Boris Johnson, as you know, has had two calls with President Xi Jinping in the last few weeks. The Health Secretary, the Foreign Secretary, the Trade Secretary. They've all had calls with their Chinese opposite numbers, and there's been a lot of cooperation about the flow of medical equipment in both directions. There are some ways, however, sadly, in which those who are skeptical of China, Sinophobes even, have exploited the crisis to fire up emotions against China, and that's obviously something of concern.
Ambassador Liu talked about trade as being the answer to global economic recovery after the pandemic. What are your thoughts on that?
It's an agenda both governments, both countries, I think both business communities share very strongly. But in so many areas, whether it's high-speed rail, artificial intelligence, urban mobility, healthcare, remote healthcare, building out a gigabit economy. We've got so much in common, so much to do together. Of course, Britain and China won't agree on everything, on not every political or security issue, although we agree on surprisingly many. But I think that those differences, that dialogue about political and security issues needs to be kept apart from the vitally important economic and commercial relationship which for Britain has, post-Brexit, global Britain has no alternative but to engage economically and commercially with what will become very shortly, if it isn't already, the greatest economic power on earth.
Well, let's move on to Malaysia now, where the federal government has announced that nearly all economic sectors could restart this week. But many, if not most Malaysians, worry that the easing of those curbs is too fast and too sweeping. Here's CGTN's Rian Meltzer reporting from Kuala Lumpur.
Traffic in Kuala Lumpur has picked up. Shops have started reopening, but many remain shuttered. People are sparse on public transport and in popular shopping areas and malls. Even many small business owners think the restrictions may have been lifted too swiftly.
Of course, I'm worried that I open now, but I got no choice. But at least now you open a little bit, you sell a little bit, at least you get cash coming in. You can pay certain things like the wages, the rental.
The government says continuing the partial lockdown till June would have cost Malaysia about 10% of its GDP. And it is spending billions to try to sustain the economy while seeing its revenues shrivel. As a federal territory, Kuala Lumpur is following the central government's instructions, allowing shops to reopen and restaurants to serve dine-in customers as long as they follow strict procedures. But 9 out of 12 state governments, including several allied to the federal ruling coalition, have either totally or partly delayed easing the restrictions by a week to give themselves and businesses more time to prepare. Judging from the online reaction, most Malaysians believe the government should have waited longer or opened up more gradually.
We are not happy with this announcement what our PM did. If we can extend a week or 2 weeks more.
I'm still worried, no doubt, but we have guidelines to prevent infection. I go home, I shower and change right away before I see the kids. We have to look after ourselves.
I do agree with them. Actually, we should have waited 1 more week, but actually like us, we cannot sustain anymore.
It's now up to Malaysians to follow the guidelines on hygiene and social distancing to make sure the sacrifices of the past 7 weeks don't go to waste.
Now, entertainment giant Disney is currently in dire straits. Worldwide, the entertainment giant's resorts and theme parks are closed. At the same time, production on upcoming releases are on hold, and advertising revenue has plunged as the COVID-19 pandemic takes its toll. But it's not all doom and gloom. As CGTN's Chen Tong now explains, Disney plans to open its Shanghai theme park on May 11th.
After being closed for more than 3 months, the Shanghai Disney Resort has become the company's first amusement park in the world to reopen. The park's announcement says the opening will be for limited attendance only.
Those wanting to visit the park will have to make reservations in advance. But despite that, industry insiders say that Disney was anxious to reopen here to help out the company's finances.
The reopening of Shanghai Disney Resort is very encouraging in many ways. For theme parks, depreciation makes up the larger portion of cost. Therefore, any increase in attendance or income would help to break even. It also signals to the rest of the world that COVID-19 will eventually pass and business will be back to usual.
In 2019, the Shanghai resort had welcomed 80,000 people a day. So Disney is in urgent need of business as usual. Its latest fiscal report published today shows the company's revenue from resorts dropped 58% year-on-year in the first quarter of 2020. The company's movie business has also taken a fall. But Disney said its biggest losses for the quarter were in resorts. Reopening Shanghai should help the company judge how fast its resorts can bounce back in other markets as well.
Disney's resort and movie businesses still contribute most to the company's overall bottom line. The resort business was heavily affected by the pandemic, and Shanghai Resort's business resumption will help the firm to see whether there will be a quick rebound in business and how other resorts will perform once they are open to the public.
While the company considers that, it can rely on its new streaming media business, Disney Plus, which now has more than 54 million subscribers, and which the firm is now counting on. The new service was just launched in the end of last year. Chen Tong, ICS for CGTN, Shanghai.
Well, on that note, let's shift focus now and take a look at commodity markets today. Oil prices climbing just slightly on hopes for a recovery in demand. That's as some countries ease coronavirus lockdowns. Now, prices were offset by a report showing a higher than expected rise in U.S. inventories. Brent crude did fall 2% today, but it has almost doubled since hitting a 21-year low, of course supported by expectations that demand will recover and by a record supply cut led by OPEC. Gold prices, on the other hand, were down as the gradual easing of some coronavirus-led restrictions by several nations raised prospects of more global economic activity, and that, of course, dented demand for the safe haven metal. Well, we are heading into a short break now, but do stay with us. Lots more business news coming up.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN. See the difference.
Now, Vodacom has finally gone live with 5G services in South Africa. Mobile operators in Africa's most industrialized economy have been waiting for over a year now to offer the cutting-edge technology. But due to the lack of spectrum, these services have been delayed, as CGTN Sumitra Naidu now reports.
The COVID-19 lockdown in South Africa caused a massive spike in internet connectivity. Since March, there's been a 250% increase in demand. To help ease the pressure on the networks, government released some spectrum.
The widespread rollout of 5G will support the South African government's fourth industrial revolution objectives. The president has previously outlined the need for South Africans to take advantage of technological advances to industrialize, pursue inclusive growth, and attract investment in the country.
The primary benefit of 5G for the consumer is that far more people will be able to connect to the same spectrum. The further benefit will be that the connection will be at a far higher speed and will have far more throughput. In other words, far more capacity to deliver content via that signal.
But the spectrum is temporary to ease the pressure during COVID-19. It's expected to go on auction later this year. South Africa is way behind in going digital. Analog television is still using up vital radio frequencies.
It's quite risky of the operators to offer long-term contracts via 5G because the chances are that after the end of May or perhaps June, that spectrum will be withdrawn again. But it does mean that the operators will have had a chance to test their networks and to be able to show the benefits of 5G connectivity.
Vodacom had launched 5G in Lesotho back in 2018 because the tiny kingdom had spectrum available. The same offering is now available in South Africa, but only in certain areas.
For now, Vodacom has gone live with 20 sites across Johannesburg, Pretoria and Cape Town. This means that Vodacom customers in those areas near these activated sites will get access to next generation services.
Vodacom 5G network, peak speeds in near ideal operating conditions should be close to 500 megabits per second download, and the average customer experience should be about 150 to 200 megabits per second download.
Vodacom customers with 5G-enabled devices and within a 5G coverage area are now able to access one of the fastest and most sophisticated network connections in Africa. Sumitra Naidu, CGTN, Johannesburg, South Africa.
And still in the country, a South African company has come up with isolation pods for use by COVID-19 patients. The country has the highest infection rate on the continent, now nearing 8,000. More than a quarter have recovered, but almost 150 deaths have been reported so far. Now, as CGTN's Julie Shire reports, Oracle 3D's specially designed pods are expected to ease any shortage of hospital beds.
South Africa has slowed the COVID-19 infection rate, partly thanks to a lockdown the government imposed early on. But authorities fear the worst is to come as some restrictions are eased and local transmissions increase. Warren Bosman's company, Oracle 3D, was already producing smoking and baby pods before the outbreak.
So about a year and a half ago, my daughter was born premature and contracted RSV, and we spent about 3 months in an isolation ward. And before this coronavirus came along, we were already practicing all the sanitizing methods and masks, and then obviously doing all the pods and that. It was kind of like a simple adjustment of just putting the two together and coming up with a solution that can contain the virus effectively.
Confirmed COVID-19 cases are rising daily, and the demand for hospital beds is growing. Specialized negative pressure rooms are needed to treat acute cases.
And these pods come at a negative pressure. So I'll just show you a little test. So if you pull the door open, you can actually see that it sucks closed. When you walk inside, the airflow in these units is very critical. So what you find is the air sucks from the front of the pod through to the back past the patient. And that is very critical so that doctors and nurses don't get affected or infected by the COVID-19 virus.
These self-isolation pods could potentially be a game changer when treating COVID-19 patients in South Africa, and they are in line with the World Health Organization specifications.
We had to value engineer the design to come up with a solution that can be made very cost effectively, that can flat pack and takes less than 45 minutes to assemble on site. There's a multitude of facilities that these can be fitted to. Any kind of expo center, even a marquee that's set up on a field. For example, for rural areas, you can fit easily 50 or 60 of these units inside with nurse stations, with a welcome counter, with the testing pods so that patients can be tested.
The company has been given the go-ahead to produce the first 300 pods. It's had interest from the United States, United Kingdom and Saudi Arabia, and may soon start exporting its latest product. Julie Shara, CGTN, Johannesburg, South Africa.
Well, before we go, let's check in on Africa's currencies today. Nigeria's naira has firmed on the black market. It's hovering at around 430 naira per dollar. That's after the central bank resumed US dollar sales to commercial lenders following, of course, this week's gradual easing of the coronavirus lockdown. Now, it still remains 16% weaker than the official market rate, which is at about 360 naira per dollar. It also traded at 387 naira per dollar on the spot market. South Africa's rand was weaker as US-China tensions weighed on investor sentiment, and global events continue to put pressure on the local currency. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.